Good evening, liquidity fader traders. I hope you've all had a good week in the markets and are ready and raring to go for the week ahead. We've got a few setups that we have on our radars at the moment, so without delaying any further, let's start off by looking at the Euro Pound. The Euro Pound is a very interesting one. We've been looking at this low over here for a few weeks now. The market came down to this level, and as you can see, we got a nice bullish engulfing candle at this level, and we got a clear reaction to this level. The market moved away, eventually rallied up to the 83.48 level, and it's since come back down to this level. And look at the close that we're potentially going to get on this candle in the next few hours. So we've had our fade through this level here at the 81.69. The market is then, at one point it was down here, the market has rallied all the way back up. So the market is 81.69 to 82.03, 35, nearly 40 points above where it opened. So potentially we have a liquidity fade on the table here. The only problem we have with this at the moment is that the first danger zone, this guy over here, the 82.27, is a little bit close by. So there isn't the greatest risk reward there. The next danger zone is up at the 82.49, which is a little bit better, but still is only just sort of around the 1-to-1. So you're going to have to play it safe with this one here. And personally, I would be looking to take this with a half a position if it closes up later on around these levels. Now, obviously, this isn't investment advice. We're just showing you what we're looking at. You need to make your own decisions as to whether this is a good trade or not. We aren't regulated or authorized in any way to give investment advice, so this is only for educational purposes only. Okay, but from an educational perspective and analyzing this particular setup, it does look a good one because we've got clear reaction to this level. The market pulls away from it, comes back to it, then pokes through, gives us the liquidity fade there. The market then closes back up above that level. The only problem is the fact that we have a danger zone so close by. So from my personal perspective, I'd be looking to take that with sort of like a lesser position than the regular position size. Moving on to the next one that we're looking at, which is the Pound Aussie. The Pound Aussie hasn't given us a liquidity fade yet, but we've still got the same level that we had last week in mind. So this level here where we get a violent reaction. Okay, so from the 18.19, the market rallies off significantly. It comes down to the level. It hasn't quite got there yet. It looks like it's going to rally again, but if we can get pulled down to this level and a liquidity fade from that level, that's certainly one we're going to be looking to take. The New Zealand yen is the next one that's on the radar. New Zealand yen has a little way to go yet. We're sort of halfway between obviously hitting the high price resistance, but we could actually put in here the lower price support as well. So these are two significant levels, and you know, wherever the market gets to, whether it pulls back to this level or it rallies on all the way up to that level, that's going to be these are both going to be levels that we'd be looking to trade. So that's something we need to keep our eye on in the coming days and weeks. New Zealand dollar, eventually when it loads. Now the New Zealand dollar is coming up to a higher price resistance. You can see over here we get a almost like a shooting star at this level here. So the market rallies all the way up to it. It's that previous high over there as well, which is nice to see. Also sort of coincides with these two highs here. We get a violent rejection from that level. The market's coming back to that level with momentum again. If we can get a liquidity fade through that level, that is certainly one we're going to be looking to take to the downside. And then finally, looking at the dollar franc, which we've had on our radar for seems like almost an age now. The dollar franc is coming down to the lower price support. Obviously, we've got a few levels that we can have our eyes on here, but initially we're at this level here. So we're going to look to see what the reaction is like to this level here. Remember, we've spoken about in the past few weeks that each swing down has eventually got has got less and less and less. And now this swing down here doesn't even manage to get towards these lows here. So if we get a liquidity fade at this level here, we're going to be quite confident to be able to get into that one. But obviously we've got to look at the danger zones being that one over there. And then potentially if we get above that, we'd be looking at this one here and then that one over there. So we've got a few levels in the way there, but the price action is coiling. The price action is indicative of a reversal. Okay, so the swings are getting less and less. So as we go down, it isn't going as far beneath the support level. If you take a look here, when it broke through, it went through by 91.13 all the way down to 89.57. Then this one broke by literally 50 pips, and this one over here by even less, 20 pips. And then when it broke the low here, you're looking at sort of 10-20 pips. So then the next swing down over here, so the next opportunity for the market to get lower, it doesn't even get towards the low. So this is very, very nice price action. So we really need to wait and see what happens at this level here. Okay, so I hope that gives you some food for thought for the week ahead. If you have any questions, as always, please feel free to drop us an email. Otherwise, thank you very, very much for watching, and I look forward to seeing you on the video next week. Take care now.